Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to today's live stream. So we've got several things to cover today. The government is talking about implementing price floors on critical minerals. Why is that important? Well, because silver is considered a critical mineral officially as of 2025. So we'll delve into that story a bit. I also want to take a look at the charts of the metals here, especially silver, because at least in the short term, I think maybe there's some caution that is warranted here. However, that could flip to the other side very easily. So let's just start off with the chart, I guess. This is the 4-hour chart. Now, I want to draw your attention to a few factors here. The first is just, look at the recovery off of Friday's lows. It's pretty remarkable. I mean, we're already, we were at $90 silver earlier in the session, right? After touching $75. In fact, even lower than that. I think the lows were what, like $71? Yeah, $71 overnight in the recent correction. That was late Sunday night, early Monday morning. Silver dropped down to 71 and change. So it's been a remarkable recovery. Now, the first thing this makes me think is, like I put in this post over here on X, silver and gold's rapid price recovery lends credence to the theory that Friday's slam was an engineered paper takedown. Put a 1 in the chat if you agree with that statement. Right? Yeah, sure, price action can drop, but it's not going to stay down as low as silver dropped if, in fact, it's not real selling, right? If it's a bunch of paper designed to, paint the tape, flush the stops, and then make a big profit on a huge silver short position, what you're going to see after that is a rapid recovery, and that's exactly what we have witnessed. Now, that being said, why is there some caution to be had here in terms of this recovery? Some may say this is just a dead cat bounce. Certainly that is a phenomenon that can occur. Now, I don't think that's the case, but it doesn't mean that the low is necessarily in for silver in this corrective phase in this bull market. And just based on the technicals here, this yellow trend line is a long-term support, well, intermediate term. It goes back to November, so not super long, right? But several months. And this is really the trend line that took us from $50 all the way up to 121. So there's your bull market trend line. On Friday, we slipped below that trend line, right? That's an ominous sign. The trend was violated. Now, I think that we can take that with a grain of salt, considering the fact that this was likely some kind of coordinated price slam. But nonetheless, the technicals reflect all the information that is available, all the price action, and so you need to, respect them. And what we have seen thus far is a nice recovery off those lows. Now, this is a 4-hour chart, but you see this orange rising wedge. That is a slightly ominous formation, especially as it comes up to this yellow line. And we've now broken down below that. We touched the top part of the orange trend line here today. And actually, we're in a logarithmic chart right now. But if I switch this to an arithmetic chart, it kind of gives you a different picture slightly. I have to adjust this trend line somewhat. Now, I prefer to use log charts, but it can be helpful and, it can provide us some information to look at both. Now, if you look at the arithmetic chart, what happened here was we actually touched that trend line, tested it above it, and that was rejected, right? And at the same time, we broke down through this rising wedge. So that's kind of, something that should give you some pause and, wonder maybe we haven't seen the lows yet. Not that I think that the bull market is over in silver. In fact, I suspect it's just getting started, but might get another opportunity to load up on some cheap silver here. Now, what would invalidate that? Well, if we get a recovery here, maybe this is a false breakdown from this wedge. If we get the silver price and it can climb above this yellow trend line and get a close there either today, we've still got less than an hour to go, so probably not going to happen today unless some crazy headline drops. But over the next couple of sessions, if we can get a close above this yellow trend line, I will no longer be concerned. But until that plays out, there's a strong possibility that silver could either chop sideways here for a while, consolidate, put a base in, or even drop. And then, if it did drop, I would likely buy more. That's what I like to do when the price drops. But, from a technical standpoint, breaking down from this rising wedge is something that should, give you pause, like I mentioned. So as soon as we actually penetrated this lower trend line, I did open up a short-term paper hedge position. I just bought some puts on the SLV just in case. They'll probably expire worthless, honestly. But given the nature of last Friday's move, if we do get a move to the downside, it could be very, very sharp, right? I think the past week, if it's taught us anything, it's that anything can happen in these markets. And the thing about silver is it does take the escalator up, right? Not the stairs. It can move up rapidly to the upside, but it takes the elevator down, or in the case of mine day, it plummeted down in the case of Friday, rather, it plummeted down a mine shaft, right? With no support at all. So I would just say, be a little cautious here. It doesn't really matter if you're stacking physical ounces. By the way, if you want to win some physical ounces, some free ones, check this out.
For the first time ever, SD Bullion is giving away 2 monster boxes of silver coins, but not just any silver. Learn more today at sdbullion.com/sweepstakes.
All right, so you can check that out over at SD Bullion. There's a link down in the description. And I also wanted to take a look at the miners today. So this is the SILJ ETF, and if we just switch this to a daily candle, you can kind of see we were down rather significantly. It was kind of a weird thing. We had silver up around $90, and then silver came off its highs a little bit, and the SILJ, the miners, were down almost 5% on the lows of the day. Now down about 1.87%, so they've recovered nicely. But you also have to wonder, when you have this recovery in the silver price, but the miners are not confirming it, that is also another sign that you should perhaps be cautious here. And, when you get multiple things like that technical pattern, that breakdown there, and, the miners are not confirming the recovery, you just got to be cautious, right? Maybe have some dry powder ready in case we get a drop if you want to stack physical ounces. Nice thing about physical is, you just keep buying it on the downtrend, on the dips, and the number of ounces that you have doesn't decline. If you're trading though with leverage, etc., you got to be careful. Let's see. Let's look at gold. So gold kind of flat on the day, and again, this is sort of a wait and see pattern, right? It's what is this? A spinning top doji, I think, where you just have the price action, moving up, moving down, and then it's kind of hanging out right around the middle, and that's indicative of a holding pattern here. Now, gold had this breakdown into this wedge that it broke out of, tested the bottom of that, broke out. It was looking pretty good. I would say gold is looking neutral to bullish here, whereas silver is looking neutral to bearish. You just should be cautious with silver. Gold looks okay though. So really what I'm saying here is there's a lot of wait and see, and we just need to let markets settle out after a move like we had last week to really see what's going on. Let's take a look at what's happening in China. So China, you've got a similar thing. Silver was up earlier in the session. It's corrected down now, recovered a little bit off the lows. Right now it's around 22,462 Chinese yuan. That comes out to $3,237. That is just over $100. Okay, fine. Now, we'll get to this news about the price floors on critical minerals in a second, but I wanted to point one thing out about these charts, and that is that regardless of if we do see a further correction or if silver and gold chop sideways for a bit here, the setup ultimately for a run to new highs is very good. We've got the RSI on silver now under 50, so it's its overbought condition is completely eliminated. Same thing with gold. Gold was back over $5,000 today, but the difference this time between the last time gold broke $5,000, so gold broke $5,000 here on Monday, January 26th. But look where the RSI was at. The RSI was at 82, incredibly overbought, right? Now, I know the RSI can go a lot higher in a bull market than 82, but it was a sign that gold was topping out. Today, we crossed the $5,000 threshold, rather, and the RSI is in the 50s. So when we do finally break out to the upside, I suspect that we're going to put in new record all-time highs in both of these metals. And I don't think we're going to have to wait too long for that, even if we do have a prolonged, maybe for the next week or two, trading sideways, even if they drop. Ultimately, I suspect by, year end 2026, we're going to have new record all-time highs in both metals. And then on the short term, just to, confuse things even a little bit more, we've got on the silver chart here, back to the 4-hour, you've got this bullish MACD cross. You got the MACD line here crossing the signal line. This is on the 4-hour chart. I like looking at the MACD on the 4-hour chart the most because this seems to be the one that's more of a leading indicator. Like the MACD tends to not flip positive on silver on the daily until the big move has already taken place. But oftentimes we see these bullish MACD crosses. You've got the center line here. You want to be below the center line, which we certainly were after Friday's correction. And you get the MACD line crossing the signal line. That's oftentimes the prelude to a strong move up on the silver 4-hour chart. So we are seeing that as well. So I don't think we can definitively say that we're rocketing back up to new record all-time highs just yet, but chart's kind of giving us mixed signals. Again, a close above this yellow line, and then I think it's off to the races, right? We might test it a few times, but once we get above that, we're going to be in good shape when it comes to the silver price. Just my forecast, of course, not financial advice, not telling anybody what to do. Let's see. Here's the story. So this dropped today. This is from CNBC. This was across a couple of outlets. U.S. plans critical mineral price floors with Mexico, EU, and Japan. And this was a Trump administration a representative, the U.S. trade representative on Wednesday, said that the Trump administration is exploring a partnership with Mexico on critical minerals as part of a scheduled review of the United States-Mexico-Canada Trade Agreement, or USMCA, by July 1st. Now, this is important because silver has been declared a critical mineral as of 2025, and Mexico also happens to be the world's #1 producer of silver. So you've got Mexico 2024 numbers, Mexico in the #1 position, China producing about half as much silver, and then Peru in the #3 spot, Poland, Bolivia, etc. down the way. But Mexico, so by a pretty wide margin, produces the most silver of any country globally. Now, they go on. I think most of this has to do with, the rare earths and things that we really depend on China for. Of course, China does control something like 60 to 70% of silver refining capacity, not production, but refining it into the, 0.999 nice silver bars that we, like to stock on places like the COMEX and the Shanghai Gold Exchange. Also, notably, the administration did launch a national critical mineral stockpile on Monday to the tune of $12 billion. So there's a bit of confusion, I think, as to what this actually means for silver. There was this piece that dropped from Reuters January 29th. It was an exclusive they had. Headline was U.S. moves away from critical mineral price floors. And this was multiple sources that told Reuters that the Trump administration is stepping back from plans to guarantee a minimum price for U.S. critical minerals projects, a tacit acknowledgement of a lack of congressional funding and the complexity of setting market pricing. Yeah, and I think that is, a very fair concern here. Price controls, regardless of what they're for, are typically ill-advised, regardless of, which team is in the White House. Doesn't matter who's implementing them. They generally don't achieve the stated objective, or they can lead to market distortions and malinvestment. But, we might get them. But again, like, how do you set a price floor under something? Well, you have to guarantee a bid, right? Or you can just forbid the sale of that item below that price. But if that doesn't make sense for the market participants, then what you get is just a market that doesn't clear, right? There's no meaningful price for it. So you either need to subsidize things with taxpayer money or printed money, or you've got to, prohibit the exchange of goods at certain price levels. And that, comes with its own problems. So really, you're going to hear a lot about this across the precious metal space today, I think, because it's kind of a catchy headline. And there's a reason I put it in the title, because I knew people were going to be looking for this and are interested with it. But I think the takeaway here is that, honestly, this is probably a bit of a nothing burger for silver, because, I don't think we need to worry about a minimum price for silver. If they really wanted to worry about the price of silver, all they need to do is go in and regulate the paper manipulators, make sure, how about an investigation into what happened Friday? If you don't want the silver price to fall too low, what about the coordinated paper price slam? That might be something worth investigating. That might be something that the justice system would actually be, a productive use of their time. But they're not going to do that, right? They're just talking about minimum prices. And I don't think that we need to worry about a minimum price for silver. Maybe if they said that they're thinking about a price ceiling for silver, obviously that would be a big problem for stackers. But minimum prices, don't worry. Silver's not going to, you don't need to worry about the minimum price. The silver price is headed much higher. That's my take. That's why I think it's really not that important. And generally, to whatever extent this has an effect to wean us off of our need for Chinese minerals and Chinese silver, which they do control quite a bit of that. Like I mentioned, they have a lot of the world's silver refining. It might be a boon for domestic manufacturers, things like that. Maybe if mines in the U.S. can guaranteed get a certain price for their silver, that might be some kind of a benefit to them. But I don't even think that's meaningful, because, again, the silver price is going to, I think, head much higher, and we don't need to worry about minimums. It's more, let's talk about minimum floor for the dollar. Let's talk about, the manipulation in the silver space, not where market forces are actually going to take the price. That's not a big deal. All right. I wanted to also delve into Bitcoin a little bit today. I don't talk about this too often, but, one of the reasons I've been thinking about Bitcoin lately is because my feed on X is like nothing but crypto bros lately, who seem to be awfully salty about the performance of the precious metals. So let's take a look. I mean, really, it's crazy. If you're on X, usually I'm looking at X to actually learn about what's going on in the silver market, and it's all just a bunch of crypto bros talking about how, silver, sell your silver and buy Bitcoin. Well, I don't necessarily think I would do that. Let me actually pull up a post from X. And the reason also this is notable is that, Bitcoin is coming under a considerable correction recently. It's down to $73,000. Gold and silver were recovering today while Bitcoin was falling. But let me pull up this post that I put on X, and here's a screenshot. It's vertical format. Kind of illustrates this maybe a little better than the screen we were just looking at. But interesting spot on the BTC chart here, I wrote, looks like a distribution head and shoulders type structure from the $125,000 highs, but we are also sitting right on $70,000 to $75,000, which is about as obvious a support zone as you'll ever get. If $70,000 holds and we reclaim 85 to 90, the top gets invalidated. If not, the chart points to a sharp decline. So this does indeed look like a head and shoulders topping pattern to me, and it's notable because we just sliced through the neckline, right? So these two low points, this is a shoulder A, you can call this shoulder B. It's not a perfect head and shoulders, it's kind of an ugly one, but there is a neckline, right? You connect the lows here and you get this upward sloping neckline, and we just plummeted right through that. But there is strong support here. It's the 2021 all-time high, and then this zone where Bitcoin, chopped for a bit in 2024, and we're kind of sitting right at this major support. Call it $71,000. If Bitcoin gets a strong close, like say a weekly close beneath this support line here, I think it's going to plummet. I think it's going to fall rapidly. And so, I just thought I'd throw that in there because the price action has been interesting and it's been popping up in my feed a lot. So I was taking a look at the chart. And, I want to say something else about Bitcoin here, because I'm going to find this post I put up about it earlier. Yeah, so I wrote yesterday, I am a gold and silver stacker, but I don't hate Bitcoin or crypto. They're just not the same asset class. Gold and silver are time-tested stores of value with real-world utility and basically zero chance of going to zero. Bitcoin is a speculative digital tech asset, incredible historical performance, but the real question is future utility, not 2010 10 entry prices. Long term, it feels almost binary. Either it becomes globally dominant or it slowly fades into a historical footnote. Higher risk, higher potential. I'll probably buy some eventually, but under 30,000 feels a lot more interesting to me than today's price. So, as stackers, if you are thinking of, selling some of your silver or gold for Bitcoin, I can't tell you what to do. I don't give financial advice, but I would say if you're going to make that trade, wait until a better ratio. That would be my take, right? I think silver is likely headed higher in the near future, and I think Bitcoin there's a strong probability, it's not guaranteed, but it could drop significantly from the current point. It's kind of sitting right at a major support zone. So, if silver goes to $150 and Bitcoin drops to like 20 or 30,000, I might actually consider taking a speculative position in Bitcoin, because I would consider that to be, a good valuation for Bitcoin. But I think it's still a little rich here, and it's a very risky trade. And, like I said, I don't hate crypto. They're just not the same thing. Like, maybe Bitcoin could someday be adopted. Maybe there's some use case. It doesn't seem like there's much actual use case to it to me, but who knows? I mean, it has performed, obviously very well from its inception, but talking about performance, from 15 years ago doesn't really matter. I think we have to just talk about, moving forward, what's it likely to do? So I do think that there is a possibility it could come to encompass the entire market cap of all assets. Like maybe all the silver, all the gold has to fit into 21 million Satoshis. Probably not. Seems unlikely, but it's still worth considering, because even though it might be a low probability event, the magnitude of such an event would be so significant that, you've got to take that into account. So, who knows? Maybe pick up some Bitcoin. I see a lot of people in the chat hate crypto. Yeah, again, I don't hate crypto. I try not to hate or love inanimate objects or technologies. I try to keep emotion out of trading and investing, just my personal take, and take an objective view on things. I think that, trying to eliminate as much bias as possible is the right way to look at things. If you want to, be successful, I think that it's more important to be rich than to be right. That is just my take on things. But we'll see. I mean, I know it's a controversial thing, and people seem to be very, polarized one way or the other. I do occasionally see some voices of reason, which take sort of a middle of the ground approach, but they seem to be rare. So I thought I would throw mine out there today, and hopefully, just bring a little rational to the conversation. I mean, it is funny to see the emotion of the crypto bros who feel the need to attack silver and gold as pet rocks and this sort of thing. And, Bitcoin could just be a fart in the air, maybe, but it could also be, the most valuable technology ever. I think it's kind of a flip coin toss between the two, but the outcome could make you very wealthy. So, we'll see. Anyway, that's pretty much it for today. Let's take a look at what silver's doing here to wrap things up. Hasn't moved much, right? The long-term picture for silver couldn't be better. Let me just continue to point that out. I mentioned that, short-term caution is warranted. Yeah, short-term, right? Long-term, look at that chart. Long-term, I think we are headed much higher in silver, right? We just broke out of a 46-year cup and handle pattern. That's why on the pullbacks, I'm stacking. It's like if silver falls, I stack some. If it falls more, I'll stack even more. If silver falls back to $50, I will stack more. If silver falls below $50, I will stack more, because to me, the writing's on the wall. Ultimately, this whole fiat Ponzi scheme thing has to fall apart, but kind of hard to put your finger on when exactly that will happen. So, position yourself accordingly. But that's it for today. Thanks for watching, everybody. Leave me a comment down below to let me know what you think about the topics that we covered in today's live stream. Share the video with your friends, subscribe to the channel, follow me on X at x.com/stacksmarter, and stay safe and happy stacking, everybody. I will catch you next time.